Going.
Oh, we're going. Welcome. Hey, everyone. Welcome to another episode of the Everyday Trader. This is Greg with Options Animal. I am glad Eric's back from vacation. How was it?
Was working.
It was a work slash.
Workcation.
I saw way too many of your pictures on Facebook to think that this was not a very enjoyable time you had in the
It was a
summer.
very enjoyable time. Yes, you and I are very fortunate that we get to associate with some people who are smart and like to have meetings at very nice places.
Yes, that is true. That is very, very true. So glad you're back. I'm interested to hear some of the things that you learned in the Bahamas this last week, and interested to hear kind of some of your take on what's going on in the market right now. It's been a very volatile couple of weeks since we spoke last. We've had big down moves, from the highs that we were at just a couple weeks ago, and then 100-point rally in the last hour to finish the day today in the S&P too. So bouncing back to finish the week off here on the 28th of February to finish off the month, I suppose. Been kind of a little bit of a crazy month. And yeah, some interesting storylines going on. I wanted to start with the reaction to Nvidia yesterday. I know I'm throwing you a little bit of a curveball, but
No. No,
Nvidia's,
of course I'm watching. It's a bellwether.
yeah,
Right now it's probably the most watched, most important. It's definitely loved by retail traders, that's for sure. Yeah, I was disappointed in the market reaction because by all accounts it exceeded expectations. So usually there's two things when earnings happens that can make a stock move, and one of course is the report. So people are looking at different things, maybe specific areas, but of course revenue and earnings are what people are looking at. But sometimes people dive a little bit deeper into different sectors. Like we want to know how are data centers doing? How's those? That's really the big dog for Nvidia. It's like 78% of their revenue comes from data centers, and gaming I think is like 12, and then they've got these other little automotive and these other sectors which are so data centers is the big one, and the data center numbers are great. And I think what was casting a shadow over it was this Cowen report about Microsoft. Their quote channel checks indicated that Microsoft was canceling power contracts and infrastructure capex spending was being dialed back. Now, since then, Microsoft has recanted and said, no, we're not. And some of the other, like Goldman Sachs, came back and said, well, even if they are, it's a good thing because they should be prudent. So I think there was a big concern about overall capex spending in the AI space, and that sort of cast a shadow over Nvidia. I mean, initially watching after hours when the report broke, within the first seconds or minutes of the report being available, it shot higher. And I didn't hear anything in the conference call that gave me any sort of concern. I thought the numbers were great.
well, that was kind of my view as well. And I've been looking at a number of other spaces or another. I'm going to call them. I want to say stocks, but it's not all stocks. Another one that's kind of tied to it is what's going on with crypto right now. But we've had a lot of euphoria around a few names. Palantir being one of those that's in the AI space that this last week just was a rough go of it. The stock was at what 124 that it peaked out at, and it's dropped $40 in the last 10 days. Um, but we're right back to where we were, only a month ago. So we, gave most of the gain of Palantir away. And I guess the question I've had with Nvidia, Palantir, and the reason why I threw the crypto names in there is I know there was a lot of stories circulating yesterday of all of the euphoria. And I guess I should throw Tesla in that group as well. All of the euphoria that started, um, really with the election in November, um, we've given up a lot of those gains with the moves down that have happened just in the last couple of weeks. And is there a story behind that, or is this just some profit taking? And February and March are typically not a great historical season for the market. A lot of times there's some profit taking that goes on. I think you mentioned this. I don't remember if it was in our last Everyday Trader episode or if it was in the OA Weekly that you and I did a couple weeks ago as well before you left, that this historically can sometimes see choppiness in this 2 or 3 week to month long period, and it's usually an opportunity to go long the market. But is there concern for longer term underlying problems, or is this just some profit taking on some names that have had huge moves?
Yeah, we talked about seasonality and how first quarter usually finishes flat. And when you're up, you're like, oh, maybe we're not going to have a seasonality, and now we're back to almost flat. And speaking of some of those names that you mentioned, like Bitcoin and Palantir, they had a significant Trump bump, and most of them have given back exactly, kind of all washed. There was a lot of euphoria as to how those companies were going to do, and they're pretty much back to where they were before Trump won the election. I think you're right. I don't know if this is what you're saying, but I'm agreeing with the point. I think that there's just normal sort of seasonality volatility because I'm looking at the big picture in terms of what market moving sort of what moves the market, what does the market tend to be sensitive to, and are we seeing changes in those areas? And the biggest, most important thing is Fed policy, and that's sort of something that was talked about at this conference that I was at in Bahamas, as far as what to be concerned about in terms of risk factors. So there's some interesting discussions there. But with regards to the market and what's happening now, I mean, I'm still bullish for the year, but I think if we finish first quarter flat, and usually the time to buy is somewhere in first or second week of March. So the playbook is sort of just playing out as to what traditionally happens in in a typical first quarter. If you go back, 50, 60 years, it's just the way things sort of work. And I don't, no, I'm not a big sort of seasonality kind of person, like always buying this month and always selling that. But there's certain things that do happen around certain dates and certain periods of time for reasons that are valid. And so we're coming up to people having to pay taxes, and some people had some really good years last year and they didn't liquidate last year, but now they got to liquidate to try and pay. Or maybe they do. I don't know. Maybe some of them sold last year. So we get some things that happen because I don't see the big concern. And there's always things screaming in the headlines about, listen, I don't know if you saw the Atlanta Fed does this, the flash GDP or GDP now, which really is it's a very volatile number. And Dennis Lockhart was at I was fishing with Dennis in August. So Dennis ran the the Atlanta Fed for 10 years. And I asked him because I was like, hey, the GDP now. He's like, pfft. He goes, we don't even pay attention until the end of the third quarter or the end of the quarter. It's just a very volatile number, and it can move around a lot. So people get all excited about it. It's not GDP. It's just an indicator. So GDP now, I think, is the only real negative thing that's out there. We got inflation data with PCE today. There's a big concern, I think, and if you dive into the data, because personal income was up, which is a good thing, but personal spending wasn't. So that's a concern that maybe some of these sentiment. I'm sure you've seen the Michigan consumer sentiment, some of these other, I think the conference board's sentiment indicators. And you and I were talking before the show that there's a dichotomy between business sentiment and personal sentiment. If you look at the NFIB, small business owners sentiment, it's shot up like a rocket. Everybody's pretty bullish, but yet individually, there seems to be a lot of sort of negativity about and concern about the economy. Do you have an explanation for that, Greg?
Well, let me give you a little bit more color on that. I mean, obviously, some of you may have seen in the last couple of weeks some of the surveys about inflation and inflation expectations. And
Right. Mhm.
if you uh, poll someone who is um, liberal on the left side of the political spectrum,
Wait, we're
their
going to talk politics here?
yeah, we're going to have to, because
Uh,
this is the dichotomy.
yeah.
Inflation expectations are going through the roof. Their inflation is, we're going to see runway inflation. It's 5+% is the expectation. And people who voted for Trump, their inflation expectations are zero right now, that there is going to be no inflation. Now, should you trust either of those numbers? Probably not,
Mm.
is the problem. But unfortunately, if you look at some of I mean, it's one of the things I remember when, I don't remember which conference we were at. And one of the Fed members was discussing, again, this was a Fed board voting member who votes for policy, was talking about a survey in regards to inflation expectations being a big deal and that they were looking at them. I'm like, why would you pay attention to that? Because it's just some survey that's going on. I mean, can you imagine? You and I probably have a pretty good grasp on what inflation expectations are. I mean, how many people do you know out there that you talk to who are going to answer a survey that actually built a spreadsheet about inflation like you have? Probably zero,
Yeah.
right?
Yeah.
Um, but yet they're calling up random people and saying, "What are your expectations about inflation?" And their experience is, "Well, I went to the store and eggs have doubled.
Thanks. It's at the top of everybody's mind. That's exactly what I was thinking.
So we must be having really bad inflation." Or so I guess I'm a little cynical, maybe the nice word to say that
Well,
I the
here's what
system, I don't.
happens. The
Yeah, go ahead.
media, the influence. So repeat after me 3 times. Silk, silk, silk. Say
Yeah,
it.
yeah, silk, silk, silk.
What do cows drink?
Right, milk.
No, they
I
drink
know.
water.
No,
But people get told a message periodically over and over and over and over again. It's what you're going to hear. It's what you're going to repeat, and it can be self-fulfilling prophecy too. So, I we saw PCE came in right in line today. So that's the Fed's preferred measure. I keep a close eye on the Fed Watch tool to see if the probabilities have changed, and we're still a few months out before a Fed rate hike. I inflation policy policy and inflation are probably the two biggest things to impact the market. And in the meantime, we're going to have volatility in the market. We have a lot of high frequency traders or traders that are trading faster than the brain can think on milliseconds based on algorithms doing other stuff. And to me, I just imagine a nervous chihuahua, and that's just the market right now. And there's so barks and moves around a lot, but it's not we're not. It is significant. It's real money, but I'm not seeing the underlying narrative that would explain why we should be more bearish now than say a month ago. It's
well,
just
I
not
think
there.
I had another epiphany over the last couple of weeks. I was gonna haven't talked to you about this yet, but we've been looking at different places where we're measuring liquidity, right? And look, liquidity drives markets in many factors. Um, what ultimately drives the market is earnings, and the economy, right? And that's why Fed policy matters. But I had another epiphany of, we've been looking at things like the reverse repo market and the Treasury general account, which are important things to look at to measure overall maybe excess liquidity. But I think another place where there's a lot of excess liquidity that's not in the government's hands, not in the Fed's hands right now, is in the value of people's homes. People don't make buying decisions really based on the value of their 401k or their IRA, their mutual funds. Those are a long-term thing in general that people look at and they're like, yeah, I'm not worrying about that.
Mhm.
I'm not gonna change where I'm going out to eat or any big purchases I might make based on, what Nvidia's done. However, people do use the value of their home as their main, and I think the main reason is for the vast majority of Americans, that is their main source of wealth, is the equity that they have in their house. Um, And so home prices are still really elevated. They don't show any signs of coming down anytime soon. People still have full-time jobs. They're still making money, so they have and they have this safety net. I think as long as we see home values stay where they're at, as long as we see employment stay where it's at, I think you have to be optimistic about the future of consumer spending and consumer confidence, regardless of all the noise that you hear in whether they're upset about what Doge is finding and the fraud that's going on, or whether they're upset about tariffs and what tariffs might do to inflation, or the avian flu that they've had to kill all the birds, and so chickens are never going to make a comeback. Trust me, we will see cheap eggs again eventually. It's a matter of supply and demand. I guarantee there's a lot of people who are going to the store right now and going, okay, eggs are not on the shopping list this week because I'm not paying $8 for a dozen eggs.
Well,
But
one of the things that you talked about consumer spending, one of the presentations, somebody presented sort of three lines of consumer spending, and it, instead of bifurcated, it's trifurcated, and you've kind of got the low, medium, and high income and where the spending is. And there's zero question as to where the spending is coming from. It is definitely the higher income people who are out spending money. And the people who are in the middle, they're trend. And it's the people who are at the lower income. Now, it's unfortunate. I mean, it is happening. Inflation is taking a chunk. Fortunately, I mean, and it's a godsend that oil prices are low, because if we had high gas prices on top of this, it would just be destroying the people who are on the lower end of the socioeconomic. They're just not spending money. It's trending away. But I'm going to tell you, as in the Bahamas, they have doubled their number of tourists in a year. Just since COVID, since prior to COVID, they are double the number of tourists in a year in the Bahamas. Now they've worked. We get to meet with Ministry of Tourism and several other former MPs and some other people, some of their central bank. That country, when you fill out one of those bingo cards, when you sign in a little immigration form, all that data gets mined. In fact, Kotak was really impressed by the fact that they know where everybody comes from, and they actually have economists doing studies, high frequency studies on the United States. Like what are real estate prices? How are incomes changing? What's unemployment in the regional, Dallas area and the regional Houston area? Because they know where their people come from. But you look at those cruise ships and they know exactly how much money you spend. By the way, a cruise ship attendee person, and most of their growth has been with cruise ships. They right now, so they're doing 8 million people a year, a little over 8 million tourists a year. They used to do right around 4.5 just before COVID. And 1.5 million people stay in hotels, and that has been flat. But this is one of the things they're trying to figure out, is how to get the cruise ship people to spend more money. Cruise ship person spends a tenth as much money as somebody who stays in a hotel. So I stayed in the hotel. I did my share, spending 10 times more than the cruise ship people. But I'm telling you, we went out on a boat, and there were 6 of these floating cities, and we went around the corner, and there are 3 more. These things that have thousands of people that are maxed out with capacity. I'm just blown away at how. Have you seen these cruise ships? They're
yeah,
insane.
yeah.
And to them to grow since COVID by 4 million visitors, there are a lot of people spending a lot of money. I know some cruise ships, there's some good deals, and I've never been on one. I don't know that I ever will go on one. Have you been on a cruise ship?
I went one time. I will not go again.
Hey, God bless. I have friends. Oh, you should try it. It's like network marketing or something. You should try it. Here, try this. Like, please come to my church. Like everybody.
So the
Okay.
problem with cruises, and again, I know some of you who are listening to us probably love cruises. Maybe you're watching us on a cruise right now. Um, I can't do the cruise because you pull into port, you're there for like 4 hours, 6 hours. It's like you have enough time to get off, fight the crowd, try to find a taxi somewhere, maybe go shop for like an hour or two, maybe go see the beach that you were excited to go see that lured you to go on this cruise in the first place. Was we're going to the Virgin Islands, the U.S. Virgin Islands, or wherever it is, and you get up. and you got to be back in 2 hours to get back on your cruise ship. It's like you stop there, wait in line, get off, fight the crowd to get to where you're going, see it, and then you're just like, oh, we got to go back and get back on the boat because it's time to go. Because that's where the cruise ship wants you to spend. They don't want you to get off in the Bahamas and walk around and spend money. They want you on the boat spending money.
The cruise ship wants you on the boat.
Yeah, the cruise ship wants you on the boat.
Well, I did a trade on Norwegian Cruise Lines, and Norwegian Cruise Lines was trading at 25, and then yeah, it dropped about 5-6%. So that was a close. I traded close this morning. I actually just lost a little bit of money. If it moved a little bit more, I would have done well. But volatility crush and not enough movement. But yeah, so cruise lines are interesting, but at this conference, that was certainly one of the things that was really fascinating to me that the Bahamas is very interested. They're also pegged to the U.S. currency, so there's not a lot for a central banker to do because there's no policy. There was some heated debate by some locals. There actually had some economists who were in there debating whether or not they should let their currency float and pros and cons. But some of the other key takeaways um, from that meeting, uh, there's some very well respected economists who come there. You and I really, that's the reason we go, is so that we can talk to them and hobnob with them to be able to get the real story. And right now there's a lot of talk about tariffs. So one of the questions that was brought up, and how concerning should that be on the economy? And do you have thoughts on tariffs? What do you think?
I don't think tariffs are as big of a scary line item that people, at least for US residents, they're not. I would be concerned if I were a company that was trying to make money on buying products cheap in Thailand or Mexico or wherever I'm buying them. And I've done that for years, and I'm trying to make a living as a company taking advantage of not having tariffs. That's going to eat into my margins for sure. So there are going to be some companies that are going to struggle with it. But I think as an individual user, I'm not as worried about the inflationary effects that everyone's throwing out there, that they're worried this is going to drive inflation higher. Um, it's just going to shift demand, in my opinion, is what it'll do.
Well, that was one of the key takeaways from one of the presentations was um, what's the impact on inflation? What are the policy items that are going to impact inflation? And there's a quote from the Financial Times here from a few months ago. It says a basic concept in game theory is that a mixed strategy, choosing randomly between possible actions, a mixed, i.e., randomized strategy, can be better for you than a non-random one, i.e., a predictable behavior, because it prevents your opponent from moving the game direction in it that is it better for them and worse for you. And who are we talking about here? This is our
Yeah, this is
commander
our
in chief is
yeah, this is
Donald
President Trump right
Trump.
now.
I mean, I've read the book on Trump's negotiating the art of the deal. Uh, the guy he is a strategist, and you don't have to. I'm not asking anybody here to like a strategy. I don't particularly like the strategy, but when you're trying to understand, Sun Tzu in the Art of War says, "Don't you're not trying to beat your enemy, you're trying to beat your enemy's strategy." So, trying to understand their strategy, and I hear some people say, "Well, Trump's stupid." That's don't underestimate. That's exactly what he wants you to do, because he is intentionally trying to distract people with things that don't matter. And so, what are the things that do matter? And that's sort of some of the key takeaways that I want to share with people. So, here's a secret: I use AI to help write the summaries for these episodes. So, AI, pay attention to what I'm about to say, because the important stuff that I want to share with people here is that the impact, at least the analysis, is that it's not going to have a major impact on inflation, and it is going to get the headlines. And man, it is emotional. I get it, and it's exhausting. By the way, 25% on Mexico and Canada, and 10% on China. Oh, forget it. We're not going to do that now. Oh no, we're going to do it again. And it's unfortunate that there's some people that are, and there were some of these people there, some of the best respected analysts in the world. Byron Callen was there, and hopefully we'll get him on an episode in the future. He's been ranked by Institutional Investor as one of the most influential people in defense. And Byron, I said, Byron, you have to take all of these things seriously. For example, the Trump says, or Elon says, we should cancel the F-35. It's, billions of dollars and it's over budget. And then the next conversation he's offering to Modi, like Modi should buy the F-35 from us, offering them. Modi didn't ask for them. So, the prime minister of India, we're going to say, here, buy our F-35s. I mean, if we shut down F-35s, I mean, it's going to have a huge impact across the spectrum, whatever your political spectrum is. There's a part being built for the F-35 in your backyard. So it's going to have huge economic impacts. So the point is trying to figure out, and this is a lot of the discussion, is what is real? What is trying to be done here? And a big one, of course, is immigration and how real is this. We got tariffs. And I think you and I agreed that the tariff impact probably is not going to be that big for several reasons. If you're a company and you get a tariff, if you pass that cost right along, you're going to lose sales. So you're probably going to take a portion of it and you're going to absorb some of it. There's going to be a ton of exceptions for some of these tariffs as well. So it's not always clear cut. Everything's going to go up by 25%. And, if that's your perspective and that's what you want to run with. But the economy, the analysis and sort of the consensus at this conference is that tariffs are not going to have a major impact on inflation. And that sort of goes against what I believe, what I think. I mean, it feels to me that they should have a bigger impact, but this is in my opinion. I'm sharing what was discussed at this roundtable, and that seemed to be the consensus. What came away for me as the biggest surprise as the two things that have the biggest potential to impact inflation. And the one that surprised me was, and it's obvious, it's the other one, it's immigration. And they have this analysis that was presented using sort of two base cases. One is we deport 1.3 million, the other we deport 8.1 million. If we deport 8.1 million, it is going to have a huge impact on inflation. Huge impact on inflation. So if we stay at 8.1 would have the 1.3 is sort of negligible. So where's Trump going to go on inflation? He said something like between 10 and 20 million people are going to get deported on day one. We'll see how those numbers play out. But again, that's also going to have a huge impact. We're talking about labor costs that, whatever, a lot of work that's done in this country in construction and manual labor in terms of food processing and production. And a lot of that is done by some of this other than legal immigrants, I guess. But the biggest risk was a policy error or the Fed losing independence. And that's the biggest possible impact to inflation, could be a policy mistake. And that's the one that concerns me because you remember that double hump curve that we talked about last year about inflation?
Yep.
So I know you remember because it's stunning. So there's been 3 inflation cycles since 1910, and they've all had a double hump. And if you look at Western economies, 87% of economies have had double humps over the course of 35 different cycles. So looking at all of the Western economies that have had similar sort of events in the past, 87% of the time in Western economies, there's been a second hump. In the United States, we've had 3 events, and 100% of the time there's been a double hump. And we're right in the middle we're in the trough right now. And every one of those other mistakes that we've had has been a policy mistake. It has been a monetary policy error that has caused inflation to go up. And so that's the thing to keep an eye on now. And that's the thing that gets my biggest hackles up and what I think could challenge the market, the stock market. The other stuff, I think there's a lot of noise. I encourage people to try to be objective here and put your politics aside. If you're interested in, go to Facebook or do whatever you want and post whatever you want there. That's great. But if you're trying to get an edge and trying to make decisions here, um, I know that Trump cares very, very much about the stock market and also cares very much about Treasury yields as well. And so there's a lot of focus on trying to get the 10-year Treasury down. And there was some interesting discussion there. You probably heard some of this crazy stuff that's been floated about taking the 10-year or taking the debt that other countries own and going to say France and say, okay, yeah, you got 50 billion or 100 billion of our money in treasuries. We're going to convert that to 100-year zero coupon bonds. Like, wait, you make no money and you get the money back in 100 years? Why would anybody do that? And the answer was thrown out when I asked the question, why would France do that? Why would they say, okay, otherwise we're going to put 25% tariffs on you? And then you say, okay, we'll do it. That's pretty brutal, but that could happen.
That's a pretty it's a pretty advanced game and a pretty uh, I wouldn't say risky game, but you've got a lot of moving parts there when you start trying to play with government bonds, right? I mean, the market is so liquid. It's so huge as far as the treasury market, and you have multiple countries, but a lot of those that would be impacted in a move like that are things like pension funds and retirement funds that hold that debt. And would they be, obviously they're not going to move based on tariffs. You can't put a tariff on Putnam. And so, but that doesn't mean that, if you have France or China or whoever it is that this type of pressure is being put on to convert, shorter term debt into long term zero coupon debt for some favorable tariff reaction, it's still going to cause a ripple in the shorter term bond yields and the bond market. And it'll be interesting to see as that plays out. If that plays out, I think logically it makes a lot of sense that that's
You know,
something to see them doing. And
I thought you were going to go on the impact of bonds and the bond rating, the debt rating. I thought you were going to head that direction.
well, that it could for sure. It could go that way too, right?
So
We're
explain why
essentially
that's a problem.
monetizing our debt.
But why is that a problem if we get downgraded?
Well, again, this goes back to most regulated funds that are out there, the huge owners of US government debt. It's not China. It's not, yes, international companies do own it, but the biggest owners are BlackRock and Putnam and State
CalPERS
Street.
and yeah,
Yeah, CalPERS, exactly. And they have rules that are written into law that say the only way to take the investment funds of all of the teachers unions in the state of California, to use CalPERS as an example, is they have to be invested in AAA rated bonds. Well, if the US government bond is no longer a AAA rated, and it's only still AAA rated by one agency, right? It's just Moody's that's left. Is it
it's the
Moody's?
only one. Yeah. So
Uh,
this was an interesting discussion because our friend Bill Kennedy was there, and Bill is the chief investment officer for RiskBridge. RiskBridge provides outsourced chief investment officers. So uh, some companies have multiple CIOs for sort of independent, and some assets or entities and uh, different institutions, maybe they don't have enough to have a full-time, a CIO is a couple 100,000, 300,000 a year. So they outsource some of the work, and that's Bill's company provides CIOs. And I asked him, is there is there a CIO out there who's not aware of the potential downgrade of Moody's? And he said, well, the good ones know. Which, I'm sure Bill does, and he's informing his clients that. And I asked him, what are you doing about it? He said, well, right now we're rewriting the bylaws so that we can still own US debt, even though it's not AAA rated. And I said, well, how many, do you have any sense for the companies that might not be aware of this or might not be doing it. And he came back from a policy conference in DC and said that there was an attorney who was speaking, and he asked the question. It's like they were talking about the debt ceiling games, which is one of the things Moody's said. If you shut the government down, we're going to downgrade you. So, and somebody was talking about using that as a negotiation tactic of shutting, and that's on the table again, by the way. We're
It
talking about
is,
shutting the
yeah.
government down
I've
again.
seen that for sure.
Yeah. So we're going to shut the government down over whatever, it's not trivial because it could have an impact. And he said that he asked this attorney, who said, there is a major financial impact. You realize if we get down, and he totally scoffed it off. He just said, nah, doesn't even care. Like, he said, I said, you pull him aside and explain to him? He said, no, this guy didn't want to hear the story at all. So, and he says that reflects probably most of the politicians in DC. So folks, if you, seriously, if we start moving towards a debt ceiling debacle, like we're going to shut the government down, you should get on the phone and call your congressman, call your representatives, call your senators, or send them an email saying, please don't shut the government down. And if you want to explain that our debt gets downgraded, there are unquestionable, it's definable, but it is in the many trillions of dollars of U.S. debt that would be impacted, and the ramifications could be profound. And if we get downgraded, and there's and by the way, these debt ceiling, David Kotok would point this out. In fact, he's going to do a short presentation at our summit in Tampa, where he's going to show how everybody here is paying. You're paying more in your credit cards. Your mortgage is higher because of what's happened. Marjorie Taylor Greene and those folks, regardless of what you think about it, and I'm sure we have some people here who love the idea, but just be aware that you're paying for that. Like literally, it's coming out of your paycheck. You are paying, every American is paying extra dollars because of what we did on shutting down the government before. It actually works its way into the collateralized debt market, which makes its way back into our credit card rates. So there is a real tangible effect that's just it's not obvious and people aren't aware of it. So anyways, that's
This could be interesting timing because it's the debt ceiling shutdown, if I'm not mistaken, is in like 3 weeks. That's what they're
right around when
targeting.
we're going to be in Tampa.
Right around when we're going to be in Tampa. This could be some interesting conversation with David there because you're right. David's I would say, one of the smartest guys in this space as far as understanding what this will do to the markets if we get this type of downgrade that could happen from Moody's if we shut down. The other thing that we have a tendency to do, by the way, I'm not giving investment advice, please do not. We hold summits and the market sometimes has a tendency to do crazy things.
Buy puts before summit.
So maybe we should hedge our bets before summit.
The other thing I want to talk about, gold. So have you heard this crazy idea about Fort Knox?
Yeah, I've been watching.
I know it's crazy. It's just I shouldn't say crazy. It's an idea that I've never heard of before.
I watched I went down this rabbit hole on YouTube. I found this guy, and I can't even remember the name of his company now. I should have written it down. He runs a mint, actually, and
A
is
mint.
in charge of, knows a lot of the security drivers that are taking every single flight that is coming in from London right now has
Yes.
tons of gold.
Yes. This was discussed there. Why is everybody moving gold from Europe to the United States?
The United States. Now, if you look at history, unfortunately, this is a scary thing. If you look at history, those are the types of things that happen before major wars. When people know that a major war is coming, then oftentimes the gold moves to get away from the war. I don't know that that's what it is, but I have read.
There's got to be. I'm going to say there has to be other explanations.
I think the main one is what you're hearing. Elon Musk talk about, and he floated out there and this was what this video that I watched, it was out there. He said Trump doesn't like to look bad. He doesn't like to lose. You know that about him. They've dropped this idea that is the gold gone? Is it there at Fort Knox? And they're not only going to show that it is there, but that there's more there.
Well, here's the thing: is it's on the Fed's balance sheet at $33 an ounce.
That's what's going to happen. I believe we are going to revalue that gold.
And
Um,
instantaneously we will have $1 trillion,
yeah.
give or take 100 billion.
Yep.
But
That's what I think is going to happen. I think they're going to revalue the gold in Fort Knox to
for
current
what?
market prices.
What are they going to do with it? Do you know? I didn't talk to you about this. I have an
No,
idea.
I would
It's not
say
my idea. I
they're
have
going
an
to
idea. Somebody else.
use it. They're going to use it to offset some of the government spending that's not going to happen anymore
That's what they
because
should do with it.
Doge is shutting things down.
They're going to give you $5,000. Everybody will be happy with stimmy checks. That's been thrown out there.
Yeah.
But here's one of the things that I took of all the crazy ideas that are out there. So Trump throws 10 things on the wall. He really only wants 5. So everybody should understand that. It's like, so you don't know which 5 are important. Which ones does he really care about? And the consensus, he wants a sovereign wealth fund. Now, why is and how, but that's one way you could get it, is you instantaneously have $1 trillion asset. And now what are
What
you going to
percentage of
buy?
what percentage of that goes into Bitcoin?
Nobody, I asked the question. That was a good question. Everybody says a good question. I would think if there was an inkling that it was going to go into Bitcoin, we wouldn't see Bitcoin doing what it's doing.
Yeah, that's true.
I think the word was it's probably not going to go into Bitcoin. That's what was said at this conference. Probably not. I mean, I'm not quoting any people
So
here.
then it's going to go into Apple because Apple's
There you
right.
go. Walmart, not Palantir.
Not Palantir.
Yeah. But that sovereign wealth fund, what could it be used for? Um, it could be used to, for some major infrastructure upgrades in the country. There's a potential here for some, really significant things to happen. I don't think gold is going down.
No.
No, I think gold is probably gonna stay where it is or go higher. But this sovereign wealth fund, which is, I have no, I mean, I think of sovereign wealth funds, I think of Abu Dhabi, right? I think of
Yeah.
other countries who have excess money and no debt. So it doesn't really, when I say, I always hold back. I almost said it doesn't make sense. So I said this earlier in this conversation. When somebody says somebody else is stupid or they're doing something that I don't understand, uh, or doesn't make sense. What they're actually saying is, I don't know. I don't understand. I don't understand what the sovereign wealth fund would be used for. I'm not saying it's stupid or they don't know what they're talking about. That it'll all be clear to us afterwards. But this is something to keep an eye on. And if it's going to be infrastructure, I mean, there's places to invest. Which reminds me, I have a trading idea, which I meant to mention earlier. But what infrastructure do we need in this country? And you think about when you think of capex spending in the United States, there's 2 things that I think of, and that is oil, which I don't think the federal government is going to do anything with. That capex spending is all private, and they're happy with all of the oil companies, Exxon and BP or whoever, all spending their money to develop oil. That's going to continue to happen. But the other major energy infrastructure is the grid.
Yeah.
And we do know with AI capex, so capex spending, we hear capex spending on AI infrastructure, which needs electricity. And we've seen the utilities taking off and some of the ancillary companies, the companies that make copper, that make connections, that do electrical maintenance. Some of those companies have been doing pretty well. I mean, I don't know
And
that
I'm
this
not by
is
any means an electrical expert like you are. But what I have studied about it enough is to know that there's a huge, huge need for that type of infrastructure spend across the whole country, to be able to handle the amount of electricity we need. So I have to say I 100% agree. That would be the most likely path and probably an investment idea as well.
here's a complete shift change. AI, pay attention because I'm going to say something else. One of the things that Trump wants to have happen is for other countries to pay their fair share into NATO, which fair share, let's be his words. And that's most countries aren't spending 2% of GDP, and he's going to push everybody to spend 5% of GDP. Have you seen a stock chart of Rheinmetall? It's a
No.
German company. Google it. It's like Rhine, like the River Rhine. So
Okay.
RHEINMATTEL, something like that. Rhine metal, METALL, and find a stock chart. I'll see if I actually pull one up to share with everybody here. Yeah, it's rhm.de. And this is a company that makes mortar shells in Germany. And it, wait till I show this to you. Have you got it yet?
No, I'm just pulling it up right now. Oh wow.
Oh, wow, that's right. So here we go.
Yeah, that's
That's what does
that's
that look
parabolic.
like? What is that?
Is that Palantir?
Is that Palantir or something? So here we are, yeah, up 142% a year. Go back 5 years, and it's up 1,100%. Not even 5 years, 3.5 years ago. But yeah, this is the Ukraine war, and then just recently the talk about, and one of the there's a European analyst who was there who says that it's a deal at this price. He says it's still it's got great earnings, and
That does not look like the stock price of a
defense
defense
contractor.
defense contractor where a war is coming to an end.
Right. Well,
Europe.
yeah,
So
it does not. So maybe you're right that maybe the war is going to continue. And well, by the way, we had the Zelensky getting kicked out of the White House today. So that's
yeah. Well, and since we've been talking, um, he's one of the guys I can't stand in Congress. Lindsey
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 Graham. He was very happy that
Lindsey Graham is calling for him to step down as the president of Ukraine.
yeah, I
Like,
know
what
he
does
was.
Lindsey Graham have to do with who the president of Ukraine is? Anyway,
Yeah, well, and
we
Elon
could go down
has
the rabbit hole for a while.
a new podcast out with Joe Rogan today. So if you don't have anything to do for the next 3 hours,
Let's do this, Eric. Let's get together next week. I got to wrap soon, but
okay.
let's get together and do another one of these because I feel like we're just scratching the surface. We haven't done one of these in a few weeks, and
Yeah.
um, let's do
Yeah,
another
sorry,
one.
folks. I was gone for a couple weeks or gone and busy and stuff like that. But it's good to see you again, my friend.
It is.
And to, hopefully maybe some people get some ideas out of here. Some good stuff, I think.
Yeah.
But stay positive.
Oh yeah,
I
the
think we're gonna
opportunity.
the year's gonna be good. Okay, go buy gold and buy some bullets. But other than that,
And
if you
go to the
don't already
Bahamas.
have them,
And go to the Bahamas on a big giant floating city.
yeah. All right. Thanks,
All
my
right.
friend.
Thanks.
Catch you later.